Thanks for joining us here on the European crossover webinar and shown here on the market manufacturing numbers. Those just came out. Obviously, Italian numbers. What else is new? That's never on time. But we did see market flash PMI 57.7. They were expecting 54.3, so a little bit better than expected. Services came in at 44.7, just a tad bit under the expected of 45.9. And composite came in basically in line, 48.1 versus expectations of 48. We've had quite a bit of data already. If you look here, we did have German producer prices came in a little bit better than expected. Also, UK retail sales data, somewhat weaker than expected, but we have seen the cable tag up to 140. Then we got French CPI numbers came in as expected, and of course, French manufacturing flash PMI a little bit better than expected here, and of course, we also got the German, which came in a little bit earlier, about half an hour earlier, came in somewhat stronger at 60.6. So pretty good numbers there. Still haven't got in the Italian consumer prices, but obviously, they're just now starting to hit. This Italian data, they're always late. What else is new? But market flash PMI was a headline that hit and decently outperformance right there, 57.7 versus the expectations at 54.3. As we will get UK PMI, that's going to be at the bottom of the hour. And as we roll into the States, we'll have Canadian retail sales with market flash PMI. That's going to be at 9:45 Eastern. And that'll be it with the exception of existing home sales. Take a look at where we stand here. In FX, obviously the dollar weaker, no big surprise there. That's what I was saying when we got right here. I was saying really was a big to do about nothing. Look at here. I think at the analysis I said the day before was coming out of the basement. Two positive closes out of the basement. Big deal. So let's go move into the euro. Going to make this move higher here in the euro. So coming up, I'm not sure where we had our analysis for today. I think it was right around in here. We'll have to check, but you can see here we're making a little bit of a push. The close yesterday wasn't anything to, it was within the prior day's body, and got a little bit of resistance here. I think at the time I was saying, someone was asking, I was saying 21.18, I believe it was. But you can see right in here, maybe that may still be the same, I'm not sure, but they're trying to press up a little bit here, going towards the end of the week. Cable, we just ticked up to 140, which is just amazing how this thing just continues to motor on. With that, we'll go on and take a look at indices. Irene says, can you please look more into detail at Bitcoin if possible? Yeah, we can actually go there and we'll go into Bitcoin. I haven't, after exiting out of my Bitcoin position, I haven't really done anything. And I thought we would have paired back. So by now, we'll see what it's doing right now. I know it was paired back a little bit. Hold on. We talked about this yesterday. If you remember, I was talking about this 450-ish area here. We almost made it down here, but you can see these pointed controls from here really went a long way to try and keep it in this bottom. We were looking for support underneath it. I think it said 496, and there was a little bit at 480, but you can see here we took the dip, but we held, and you can see where we're at now, 646. So pretty good, nice little rebound. We'll take a look at Bitcoin. Man, this is something else. I would have thought this was what I thought. I thought I mentioned this yesterday. I thought this move to here was going to be rather quick. And then we dip back. And prior to that, I thought, okay, it might make it up to the 52-ish, then back down. but we did a lot of homework in here. But even here, I thought we would have pulled back. We even had a nice little gravestone doji right here. Look at that. And it just keeps on pushing higher. My target for spring was 75,000. I don't see anything outright that we can say, okay, it's definitely going to this price. Look at that. This was pretty key to get past this 161. And everybody keeps thinking that it's going to roll over here, but it hasn't rolled over yet. And I think that was 161% off of this. You see that? So sometimes with markets, you will go past this 161% and hold there. We're holding a little bit longer than I would have expected, but it's all new territory. I mean, it's just going to be interesting. The only thing that I can say is that it's still holding up. We did get past this. We had a this little gravestone doji. We dipped. We came up here. We're still holding here, but we haven't. It's just at this point, I'm not. If we take a look here, just about the time people go, oh yeah, it's going to go to here or there, then we see a prayer back. There's not. This is all short term. You see right here. If you're looking here, that's all short term. So you'd have to look. If someone was looking and say, well, I'm looking at it from a we'll take a look at our daily. I don't even think I have the daily on there anymore. Hold on. It's going to be interesting when it finishes if it finishes the week up in these levels here. But if you look at it, other than just moving these or tagging these highs right there, and that's not, I wouldn't put a lot of stock into that, but you can see right here and right there, that'll give us just a little bit above 54,000. But once again, we didn't get that much of a reaction from here. That's why I question putting it here. You definitely wouldn't. I don't think anyone's going to do something foolish and try and be short. It's going to be key, though, if we can close above here. It's going to try and push up higher. But at this point, as I said, originally I thought it might go above 50 and then turn around and come back. And then I said if it didn't, I was thinking 53-ish. Then I had different little guesses at the time. But the thing that makes it more difficult is we've done a lot of homework here. As far as the market holding up and hold up very well here. So maybe we get one more little pop, but it doesn't seem to be letting up, and there's nothing to suggest that it is. You can see how small these ranges are, so it's able to digest up in here. So we push higher, it's going to want to go push again. I'm not sure how much it's going to go push at this. I thought it was 75 by spring, but it is holding up very, very well. We're going to move into the news. Yeah, Didier says it just passed 52,500. Yeah, well, thanks for taking a look at it here. Obviously, the key level right now is going to be a 2-hour close above that right there. And that would be 52,400. So 52,400 right here. And it's above it. We'll have to see whether or not we get that 2-hour close above it, but holding up very well. Let's go and take a look at the news. Actually, I almost overslept. I thought I woke up earlier and I could have sworn today was Saturday. I would have overslept. Um, and I kind of kept thinking about, no, today's Saturday. Crazy thing. Today's not Saturday, it's Friday. But anyway, Elon Musk says Bitcoin is slightly better than holding cash. Elon Musk Thursday said that Bitcoin was only a little bit better than holding conventional cash, but that the slight difference made it a better asset to hold. However, when fiat currency has negative interest, only a fool would look elsewhere. Musk said in a tweet, Bitcoin is almost as BS as fiat money. The key word is almost. He also defended Tesla's action to invest in Bitcoin, saying the difference with cash made it adventurous enough for the S&P 500 company to hold cryptocurrency. Tesla's 1.5 billion Bitcoin purchase set the cryptocurrency soaring this week towards the peak above 50,000, while Musk's recent promotion of Dogcoin, if you call it Doggy Coin or Dogecoin, on Twitter also lifted the price of that cryptocurrency. Dollar nurses losses after jobs data and Mars recovery narrative. Sterling is buoyant. The US dollar paused on Friday after its biggest loss in 10 days as disappointing US labor market data bruised optimism for a speedy recovery from the COVID-19 pandemic. The greenback continued to buck its traditional role as a safe harbor currency, falling in sympathy with U.S. stocks overnight at an unexpected increase in weekly jobless claims soured the economic outlook. The British pound, near an almost 3-year high, reached overnight when it surged the most in more than a month. Amid Britain's aggressive vaccination program, the dollar index was little changed at 90.56 in Asian session. The string of labor data is weighing on the dollar as other indicators have shown resilience as Joe Biden's pandemic relief effort takes shape, including a $1.9 billion spending package. And I was going to reference that along with equities. Prospect of a massive U.S. fiscal stimulus plus a successful vaccine rollout are solid arguments to bet on the U.S. recovery this year, said Rodrigo Catril, senior foreign exchange strategist in Sydney. But the overnight jobless claims data serve as a reminder of the unevenness of the recovery so far. Starting mostly flat at 39.65. Obviously, we just tagged 140. Many analysts expect the dollar to weaken over the course of the year, as it traditionally done during times of global economic recovery, though it might take some time to develop. It looks to me like there's exhaustion, just that straight global reflation theme, leading the dollar to trend largely sideways, said Daniel Bean, or Ben, head of FX at ANZ in Sydney. If the trade should ignite once fiscal stimulus starts to kick in and services start to reap in a more fulsome way, he said. Yeah, here's the deal. If you look at the 2-hour chart, we held in this area, this 454, which I was looking at anyway, because if you look at the on the profile chart, you can see here. See this? That's why I was looking at these, and I said, if you look at those, that points towards. It's actually above 450. It comes in at 458. And I was looking at that, being like, okay, if they get down there, you can see right here. There's a lot of liquidity there, not liquid, but a lot of volume acceptance there. So I'm thinking, you know what? That's gonna want to hold. I actually took a long. Over at I think it's 490, and then again I bought some more. I think it was 480 after kind of held it here, or 470 something like that. I don't remember, but I didn't hold it for too long. But I thought that was going to be a good area. Probably should have waited until it dipped almost at those lows. But I did go on, and it came out okay. I mean, obviously I'm not still. I did not long still, but I'm saying is that's the way I kind of played. I thought, okay, we get down here. I was looking at volume. I'm thinking, I think it's getting tired. We're coming into some good value here. I'm talking as far as the uh, the trading den. But one thing I was looking at this morning, which I haven't been paying much attention to, was ES. And you can see here is we really started pushing up this morning. Look at that. But I haven't paid that much attention to it. My focus has been primarily on NQ. The real key measure here is going to be right here, this 13,684. That's going to be key. I think that's also showed up very well on the 30-minute, if I remember correctly. Maybe see. But to me, it's going to be how we react to 684. To me, that's where the market's going to go, because you can see here this trough. You see here these highs, a little bit of battle here. We drop, battle here. We rally above it, battle here on the closes. So I want to see how this market reacts. But a lot of people might be kind of stuck here, so we can start to push. The key thing is that I think as the jobless claims came out worse, it still gives that credence that it gives more opportunity for the go big crowd, and that would push this thing. I'm not saying push it all the way right back up, but it could force some people that are trapped short to get squeezed, and we could move into this zone here the same way we had this zone here, which worked out pretty good. You can see right there in the blue. But anyway, let's go and move into the analysis. Amir said to look at the platinum. Yeah, we can go and do that then. So bear with me. Let me move into the other chart screen. Holy smokes, this thing has really exploded up. Let's take a look at it on a weekly. Man, boy, is that a run. Let's move into a monthly. Hmm. Hmm. 38% comes in at 1432. So if that wanted to go further, it could. Just trying to get our bearings after this big run. No, they made it to that level. Let's take a look here. You know me, I always go with the bodies. So look at that. Look at that's exactly where they ran out of gas, right at the body. See that? That's why I don't go with the wicks. See the bodies, that's where it counts. So you can see the body was 1343, and that's where they went to. They went a little bit above it. 1340, looks like 49-ish. Yeah. And they've come off. That's on a monthly. This was key for them to get above this body, which was 1240. Hang on. This got disjointed. Hang on. Okay, and this wick here, right now we're looking at 1290. Yeah, 1290. These two wicks almost line up. But let's see if we can see something on the weekly. 1282. Well, for right now, you got a little bit of support right there. Last week's wick, which is 1281, right there. With additional support at the close, which will be 1264. And moving to a daily. Yeah, they defended this pretty well right here. This dipped down to 1240. That, like I said, when you look at the last week, see the close here for last week? That was 1264. Going back to the daily now. Key for them to defend is this 1240. And they did that. They defended the 1240, which I think that was the monthly level. 1240. And I think that was a wick off a monthly. So 1240, they're defending it well. What they need to do right now is your immediate support then would be 1251. That's a long ways off. Or you go with those bodies. You need to defend 1265. But it's doing it right now. So with that, we'll go on and let's go and move into the analysis here. UK data out in 8 minutes. So Euro responded with a positive rally on Thursday. We talked about that here. The pair remains bearish. Resistance on Friday will be 2118 with support at 2048. So we're holding up rather well. We saw 2118, which was where this area was here. If you see these touches, the resistance for them to break out of would be right there, 2131. I didn't believe they would make it there. That would be the initial from where we saw all this big sell-off. But for them to knock out some bears, some bears, you see right there, 2131. That would be the area where, okay, you get above 2131 on a closing basis, that's going to knock some people out of the box, 2131. So we'll go and list that. I thought I saw this early, but that might be a little, considering how strong they got repudiated from this area here, which was previously, remember, that was our bias chart resistance from this last week. And of course, I had the storm and all this other stuff, so I wasn't able to come in those 2 days, but that was been our key thing. So the market was repudiated from this level in a big way. So I think, okay, that's still pretty bearish. This was within the body, so they may be able to push up to maybe up in here, which was the 2118 area. But this is going to be you have to focus on this. If the market is at that level into the close, and that's going to be worrisome. So we'll go with that body, those bodies coming across the board, which is 2131. And the reason I'm moving to that, because that's going to make a difference. We're on a Friday. If we close, if the market's still sitting at 2131, it's going to force the bears to cover. Because you're then going to be above these closes. You have to cover. So I'm not saying that would happen, but I'm saying that's going to be a magnet right there for a fight on either side. We're above it right now, but that's going to be basically, I wouldn't say a pivot, but I'm saying it's going to force bears to cover if we get a close above 2131. As far as support, that would have been at 2048. So if things were to turn around, doesn't look like it, but it would be 2048. That's why I say it's so important just to go with the levels, um, because that's what's going to make a determination. Actually, I was going to speak about that earlier, but why lots of times you just want to see it is whether don't make a judgment, it's just acceptance. Does the market accept it above this price, accept it below that price? So you can see that when we made this run up here to 21.59, that was key. That'd been the resistance. So that's what I'm saying. The market repudiated it, and we came to that key level here. And once it did that, that opened the door for us to really move this lower. Now we've come back. We'll see whether or not this is going to really be a pretty good little dogfight here, 21.31. Let's go move into the cable. This cable is bananas. So cable closed at a key resistance level 39.62. Resistance will be 39.95 with support at 38.49. So just stick with that, although it did get above it. 39.95. And I think that was a weekly wick. That's I came up with the 39.95, and that's just pulling it out of nowhere. 38.49, which doesn't seem likely, but we'll stick with that. If the market was to pair back, so that certainly doesn't look like that's going to happen. And let's go and move into the Aussie dollar. Dang, this thing's above it. Sheesh. So the Aussie closed slightly higher on the backdrop of the employment report. Resistance on Friday will be 77.85. Well, it's above that. With support at 77.07. Well, it was 77.85. This is that level. If this closes above here, I'm saying is those where the levels were at. But right now we're above this. It's going to be something else if we're able to stay above 78.05. Just like the euro is what you would call 28.31 is a battleground. That's what this is going to be. So we have to have this closed. Our resistance at here. I thought we might just come up in here and diddle doddle, but obviously they're making that push here. And here's the thing: on a Friday, it's like 50 pips says the Friday flows. You can't fight the Friday flows. Now it really wasn't pushing that way. They were kind of going back and forth. But just like I told you, when you start to push up against these levels, people are like, do I really want to be short if we close above 78.05? That's going to trigger a move up. And that's what's pressing right now. Whether or not we hold it, that actually is going to be the key level. I didn't think they would actually get up to that point. As I said, I thought they'd kind of diddled all up in here, but they've actually done it here. So that's it right there, 78.05. We have to respect those levels, especially on a Friday. And that 78.85 had held up rather well over the last couple of days, but this is the fight right here, 05. And we'll honor the support that we had, because it certainly doesn't look like it would go down there, but that would be the support, which would be 77.07. That looks farcical from this point. Onto the Kiwi. Sheesh, that's breaking out too. Holy smokes. Kiwi closed slightly higher on Thursday. Resistance on Friday be, that's the same, the one we've been talking about, the 72.39. We supported 71.51. So this one, we're going to hang on to our hats right there. That's solid. See that 72.39? Once again, going with the body closes. You see, so here, this one's just slightly lower, but that 72.39 is a rock. meaning that's what counts. You can see you can have these little wicks above here, but what counts is a close because that's put up or shut up time. Whether that's on an hourly close, whether it's on a 2-hour close. You know, I don't follow the hourly, but once again, I put a lot of weight on the 2-hour close or the daily. So we're going to go 72.39. It's above it, so that tells you something. And this was 71.50. Onto the dollar CAD. Well, the dollar CAD closed up 28.67 with the market. Doggone it. With the market fighting to hold the 28.67 area. Yeah, there's quite a bit of a dogfight there. Support will be 26.58. We're below that right now. Resistance at 27.65. Man, this dollar is just a dog. So once again, we'll go with that 26.58. Below it. And resistance, we had 27. Well, I actually had it up here. If it were to rally, which will honor that, because it's kind of like what I was talking about the dollar when I was talking about last week. You see 27.65. The point is not to say, oh, wow, this thing could keep on going to the moon until 27.65 is a real battle. No. Well, just like the dollar last week, all it meant was you can move up in here, but nothing changes. There isn't a real, it's still bearish until we get above here. So the 27.65, not that that's realistic for it to get at this point, but it's just like the dollar last week. I mean, I don't know. Some people kept saying the dollar's going to take off. The dollar's going to take off. We're still waiting for the dollar. It must be the boy that cried wolf. We're still waiting for the dollar to take off. It's why I said just yesterday, or was it the day before, is wow, 2 positive rallies out of the basement. That's all it is. It's 2 positive rallies out of the basement. Nothing to breaking news, stop the presses. It's still a dog. So let's go back. We talked about the 3 months ago about the submarines honking and why we were expecting to fall lower. Let's go and now move into the peso. This had a pretty good little range yesterday. Look at that. Not huge, but considering what's been happening, decent little range. So the peso posted a wide range on Thursday, finishing with a mildly positive close. Resistance on Friday will be 20.45 with support at 20.15. So there we go. On to the dollar yen. So the dollar yen paired back for the second consecutive day. Resistance on Friday will be 5.92 with support at 5.40. And look, we've even dipped even a little bit lower, but we'll stick with what we had. So 5.40. $5.92. And it was just technicals. You can see right there, 5.40, right there, that line. That's what came out with that. I said, well, they're probably going to push. They're not going to hold at that 5.52. They're going to press lower and 5.40. Well, they're still below it, but not a whole lot. But that's what I was looking for this market to dip down to. Now to the dog with fleas, the buck. And I was just looking at the technicals and the way this market's been responding. So it's not anything as far as thinking it's doing this or doing that. It's just until it proves itself, it hasn't done anything. And then all of a sudden, the same people were saying, oh, we're going to take off and all this stuff. Well, if you're not doing it when the market had paired back those other 2 times, then when are you going to do it? I mean, when the market was at its lows yesterday, this index, the dollar index, should have been pushing even higher. You see what I'm saying? And instead, it was just weakening like a dog. So if it's not accepted at higher prices, then you're going to turn around and roll back. It's just like the euro went at that 21.59. It got repudiated, and then we saw follow through the following day. So we pulled back on a day where you saw indexes at their lows. So what do you think it's going to do? It's going to go and end up weighing on it. Hence, we're pushing lower here. Well, this thing's just an absolute dog. And now you got people on the run. So if you look here, this is the key support for right now, whether it holds or not. I've got 90.30. Dollar closed lower on Thursday following two positive closes. Support on Friday 90.31 with resistance at 90.98. Doesn't mean that this thing can't push even lower, but that's the key area right now is 90.31. I mean, if it's gonna hold up. And just like I told you, it doesn't mean that it's so bullish. It's just that it stays bearish until we can go to a place where there's a fight, which would be 90.98. On to the cross rates. We're still working hard in the NASDAQ NQ. We're at 13,676, and I was trying to watch that 13,685, and why I thought the market's just going to stay dead until then. We'll just do a quick look-see there. You see here? And that was that area. And see, don't forget, this is the VWAP off of the January 31st lows. So we've kind of held that. And once again, on the VWAP like that, you can overshoot it, but as long as we're kind of holding, we're working away from it. And my concern is that as bad as the employment numbers were, that puts the hand, if you're looking at it from a trying to hang your hat on something besides the technical, to me, it opens the door where if things are worse, then that puts it more in the hands of the bigger is better on the stimulus package. So it ends up garnering more support because if it's weaker because of the employment data, that the jobless claims is much weaker, then that puts more in the camp that they could go with something a little bit bigger, which is going to in turn push this thing up higher. Not saying we're going to be back at highs here, but right now you've got the market. You can see here, you see the body closed. That was a solid close. It took out this body, right here. So they came back and tested it. They held here. So the door was, I was saying previously, like, wow, the key would be will they go after the lows on Friday? Well, they're not at this point. Because you see here, they held this test. They closed above this body. So there's acceptance. You see what I'm saying? And then look at these two right here. There's acceptance. So now the challenge is the 685, but we're holding up very well. And with that employment data, it might have people go with the argument that, oh, well, this is going to put more I'm trying to think of the right word, but more, it's not the right word, it's not biased, but the percentage would be greater for a bigger stimulus package even at this point because the employment data is weaker than most expected. And with that, the market's probably saying, okay, well, I don't want to stay short, and they'll allow the market, since it's a Friday, to keep pushing a little bit higher. Well, how much we go, but I think it'll be within this zone here, and then they may start next week and say, okay, let's see where we're at now. But that's the take there on that. So let's go back to the main screen. And go to the cross rates. Well, we're still pressing higher here. This thing is still holding up like a rock. So resistance is going to be this top wick, 670, 671. And 75.64. We'll just keep it as a low. Right now, this markets are trying to press for higher. So it's not like they're going to come back and it's a two-way market. They're just pressing for what it's worth. Let's see at the euro pound. It's over here, still in the basement. We had 86.55, so we're going to keep that. It did dip below it. And we'll keep this 86.96. Moving on to the Euro odd. Look at this. Just, man, this odd is really doing well. Holy smokes. 55.19. Let's go and see. Let's take a look on our weekly chart. Like that old song, How Low Can It Go? You see this wick here? Right there. That's going to be it. 54.72. See if we can hold in that area. And then for resistance, the body close there. 55.30. Onto the Euro QE. Same thing, the body right there, and that's where support is. 66.75. We already had that. Upside, it's like the euro, the same business too, is or the dollar index, not the euro, but the dollar index. It's like you go with this level up in here. Now we're really under some pressure here. We'll keep it simple. We'll just go with the lower bodies here. You see this body here? It's almost confluence in there, so keeping it tight. If someone was still short, it would be right. Let's call it 67, 67.70. Onto the RCM. This thing is another one going bananas. Let's go to the weekly chart. Can't say that there's anything definitive. Look, the only one is right there. That weekly close. And this one. Okay, this weekly close is right there. 82.71. But really, you'd be going with that one if it's going to push higher. 82.91. See this weekly close here? Yeah, we'll go with that one. There's one here, but you got to go with this one here, the close. So let's call it 82.92. Something else. Doesn't mean they're going to get there today, but it's probably where they want to go to for the early part of next week. But I think it's silly to put it 71 when they could push beyond that. So we're just going to have to go with that 92. And then on the daily, for support, go with this the close here, the open there, 81.96. Okay, you you can't even talk. Doggone it. NQ made it to the 13,685 right now. We're right there now, 686. Onto the guppy. We had the 47.41. They're still pressing. You just got to go with the here was the close, which is 47.61. They're battling it here. The resistance is going to be yesterday's high, 47.74. Support, we had 46.51. It's going to be that body close right there, or open, I should say, 46.71. And lastly, starting odd. Good little fight here. Look at that. Stearns at 39.97. Well, you can see what the resistance was right here at this body. It's not, we're above it. We're way below it now. It looks like, oh, well, that's, now it's easy to say, no, that would have been it right there, which is that body, which would be 79.83. But that was a pretty good turnaround too, or turnabout. And support would have been this open, this one right here, which is only from yesterday. So other than that, you have to dip back down to 78.25. I think right now that they're just goosing the stops. You might have right in here. Well, if you look here, this body close and this open confluences with this wick from yesterday. So that would be support. I don't think we're going to get there. Well, we might, but 78.45 right now. He's 75.45. I think they're just testing the stops. That's it. And that's going to be it. That's the completion of the bias chart. We can go back to the euro. Wow, the euro's about 21.38. That's what I'm saying. If we get it's a Friday. You can't be short if you get this close above 21.31, unless you're holding for longer. Because here, this is what I was talking about earlier, and I was saying I was going to reference the NASDAQ. But look, so if you get a close above 21.31, think of it this way. That's acceptance. The market is accepting it, and regardless of whether it's a Friday, which does add more credence or more likelihood that we can get above it. But if we close, let's say we close the week at 21.40, 21 whatever, then the market has accepted this 21.31. It opens it. So let's say you're short. You're probably going to say, well, I'm not going to turn around. Let's say it's Monday. Well, I'm not going to sell it again now. Let me see if it's able to rally up to 21.59 and see what it does then. You see, because they've accepted, the market has accepted it. What, on the closing basis, in this case, if we close the Friday, the day out, or actually we close the week out, we've accepted that. So now you look for the market to challenge it and say, okay, let's see what it does if it goes up here. Or is it going to try and go up here? Let's see if we can go up there and challenge. So that's what I'm saying. If the market accepts it at that price, you're stuck. Henceforth, I'll give you an example. I'm referencing here. You see here, I said, look, when I was looking at this morning, I said, well, look, this market looks like it's going to go to that 685. That was that prior move. The 643 was important, but they've been going back and forth on it. So I go, the next one really it's the 685. So I go, that's what the market's going to go to see if it can get up to that level. And sure enough, that's where it went to. It got above it. We were just talking about 686. Now we're 10 handles or below it. But the point is, once we got this dip, we defended the 13.55. Like I told you, I'm saying we got down here. We defended it. So the market starts to move. And look, they got above that prior close. So the market's making that push. Once we got above here, you see these two closes, the market has found acceptance. So it's not going to come back down here without a real fight. So now once it finds acceptance, just like I'm talking to you about the euro, now the market's got to move higher. And people say, well, I don't like it. I think we're going lower, but I'm not going to fight it. I'll see what we do at 685. And henceforth, we get to 685. Now, whether or not we get there or not, to me, I think that we're just going to be in the zone right in here. Anything that's happening within that zone. But that's the first test, which is the 685. So I'm saying is you wouldn't want to challenge it and say, okay, now I'm going to fight it. I'm going to step in and fight it. I'll get short at that point because look, the market's already done a lot of work down here and now it's coming back. Now, once it breaks on the initial break, like it look right here on the initial break and everybody got like, oh my God, they hit the stops. Then you can take it on because now the market has broken down. Now, this is after the market's broken down once, it's broken down twice, it's held it. So you don't want to just come in here and blindly sell it. And plus you're going against on a Friday, because anybody who's short, who still doesn't want to cover, is going to be forced to cover if we get a foothold above 685. So that'll cause a little bit more short coverage. So that's what I'm thinking. We just might diddle daddle in this area. But what the market may do then is we kind of diddle daddle in here and come in on Monday, and then we just see where we stand right now. The reason I think we're kind of holding up rather well, if someone wants to have some kind of a fundamental part to it, is probably those jobless claims, which brought us even lower yesterday, is probably adding a little bit of fuel to the fire that the market is more, Congress is more likely to go with the bigger portion of the stimulus, because it's pretty hard to say, I want the cheaper when your constituents are still having out of work. That's why if you're trying to stick some meat to the bone and say, well, I'd like to see more, like, what does it mean more than just it's hitting these technical levels? That would be something to hang your hat on, so to speak. Okay, Richard says, thank you. I think that's for leaving the bias chart up. And looks like odd is taking off. That's what Mark is saying. DXY is tanking. Any change in your levels on odd and DXY? Yeah, we can go back to that. It's hang on one moment. Let me go back to that. Let me go back here. I don't like to change the levels for the sake of changing the levels, like to match where the market's going. But we will take a look at that. So here's been my deal here with the dollar index. You can see they're holding at 90.31, and that's the bias chart. I'm not saying that we can't go lower. You see here 90.31, and I do the analysis the day before. I mean, I do it in the Asian session. Like today, we'll go back to the euro. In the Asian session, I had the 21.18 because I'm thinking, well, this thing really fell off hard. We'll talk about the same thing. Is the market going to find acceptance above 21.59? We did not. And not only did we not find acceptance, the market was repudiated hardcore. Because look here, we can't get there. We can't get there. Can't get there. Finally, we get above 21.59, and the market not only pairs back, it falls back in a good way. So that opens the door for this market to go much lower, because anybody that would have bought, or anybody above 21.59, or anybody that thought we were going to, hell, once we get above 21.59, I'm telling you, it's going to be blue skies ahead. Well, those people like, what happened? So they're going to have their stops here. So the same thing in reverse. If they're not going to turn around and say, okay, I'm ready to buy. They're going to say, no, let's see what we do at 27.3 or lower. And henceforth, the market got its overdone. So now yesterday we came back, but we didn't take out the prior day's high. We didn't even take out the low of this wick. So that's what I'm saying. I go, well, I'm looking at 21.18. I saw this level, but I'm thinking, they're probably just going to diddle daddle here. So initially, resistance will be that 21.18, but this is what's going to cause stops to be hit, which is anything above 21.31. And you can see right now they've pressed it. We're not way above it, but it's going to be key. If we close above that, shorts have to cover. So the closer we get to the close, as long as they can hold it up in here, it's probably going to keep the people's feet to the fire. So going back to the Aussie dollar, what Mark was asking about. This thing, look, if it's above 78.05, and I thought the same thing with the euro. I thought I had 77.85 for the last couple of days, I believe it was. And even with the employment report, it didn't do a whole lot at the time. But I'm saying is look, we're above 78.05. So once again, it's like, this is key. You got to go with these closes. As long as it's above 78.05, that's all that matters. Now, how much further can we go if you're saying, well, where could we eventually go to? And the Aussie's doing pretty strong, pretty well against everybody across the board. We'd have to look to a weekly chart. And let's see here. The next key body is right there. And that is 79.04. So it's a long ways before we get there. So, but to me, at least for today, right now, it's more important where we are right now. And you can't be short if you're above 78.05. You just can't, because that's where the market closed. You see right there, 78.05. We had some wicks above it, but it's matters where it closed. Look where the market ran out of gas here, 78.05. You see what I'm saying? Look what the market ran out of gas a few days ago, 78.05. So if you close above the 78.05 and it's a body close, it's just, it doesn't mean that we're going to turn around and go to Venus, but I tell you, it's going to knock some shorts out of the park. Going back out of the to the dollar index, your question there, we can see they're still defending 90.30, and that was my level. I think I put 90.31. It's just that that's what I'm saying is I was a bear on this dollar for some time. I would even in the chat room put the submarine honking horns. Remember that? That's from 3 months ago. And people kept saying, oh, we're going to see this massive rally. It never happened. But it's not anything that I'm seeing. It's what I'm telling you from before. Is the market accepting it? And then once again, if you want to hang some meat on the bone, just like we talked about the NASDAQ, hey, with this jobless claims, maybe it caused it to push higher. I'm just going with the levels. That's all I found out. I don't care what the market thinks. I'm just going with the levels, although you can find certain things you can hang your hat on. So once again, remember remember. Look at yesterday when the NASDAQ was under so much pressure. And what the hell did the dollar do? Nothing. You see what I'm saying? So all it's done is, and I said that yesterday, big deal. It had two pot because I was out because of the weather with no electricity. So I come back like, big freaking deal. Big deal. It had 2 days of rally. From where? Out of the basement. Talk to me when you're up here above 92. Then, as my dad used to say, then we'll talk turkey. Until then, shut the hell up. And I'm talking about the market, not saying it towards anybody else. This means nothing to me. Absolutely nothing. Because it came from the basement. And look what happened. Yesterday we sell off and more selling off. So that's what I'm saying. I'm just going what the market is telling me. And when I'm saying is there acceptance above a certain price? And that's what I'm saying about the euro, or we're talking about the cable then, or the Aussie. Is there acceptance above 78.05? Well, it has more to do with it as we go to the end of the week. Shorts have to cover. But that's what I'm saying. There's nothing here. There's nothing here with this dollar. It's not, and like I said, if you want to hang some meat on the bone, then you would think that the dollar would rally when you see the NASDAQ and the S&Ps come up hard. And the dollar actually even sold off from where we were yesterday. It didn't even take out the prior day's highs. So the market's telling you everything. It's not even accepting it at this level here, which was resistance right there. You see that? Even when the market has the impetus to move higher. So anyway, we've already had a long webinar, practically an hour long. But anyway, I hope that it explains that and why when I look at the 4-hour chart here, and I'll close it with that. It's an hour-long webinar. Is what I look at essentially acceptance. Are they going to be able to find acceptance at this level? Now I was mentioning, hey, look, they're going to go to 685. That's what I think is going to be the key. That's exactly where they went to 685. And now they're starting to pare back. But look, it's been a pretty good run up to 685. They're not, once again, I wouldn't say immediately come in and sell 685. It's a good place to take profits if you played this long, or if someone wanted to play it short, fine, but I wouldn't stick around for too long because once again, we'll see what we have. The market may just try and dawdle in here. But once again, when we went down here, I thought, okay, this looks pretty good. Look at all these points of control here. So at that time, I was saying, well, I'll take a long there because we're pretty oversold here at that point. But it's a matter, will the market find acceptance? If the market found acceptance below 650, this is right here at 660, right there, then I'd been like, man, well, I would have already been out. But I'm just saying is, and I'm talking about 460, I'd have to say, let me point this. I got to get the hell out of Dodge if it finds acceptance there, because if it finds acceptance below 460, then it's going to be like that sorry dollar. You're going to hear the submarines honking, and we're going to have to come down here. So my thought was this: if you look at it here, I'm like, well, it looks okay. That is at 33%. But when I looked at it on the market profile, I'm like, oh, wow, look at this. We've got, look how that was well defended, meaning the point of control where the most of this volume was being done here. I go, okay, well, that's going to be a decent area. It should hold. And even then, I probably should have not rushed in because I think I originally came in at 590 and then I added and I think it was 580 or 578. But the point is that I thought, okay, I think this market is going to want to step in and defend this area here because there's going to be a lot of volume to come in. So once again, had the market gotten a hold of a move below this 460, then that would be acceptance below this lower area, and that would have been pointed to much lower for the market then to find value. It's no different if you're trading FX, but that's the way I look at it. It works better for me, and that's why I just say it's all about the levels and the momentum. Anyway, enough said. Have a good weekend. Thanks for joining us here on the European Crossover webinar.